Stoxx, today we discuss two of South Africa's largest unsecured lenders, Capitec and African Bank. Now, let's discuss their funding business. Paul, let's start with you.
The reason we must talk about banks and their sources of funding is because in the unsecured lending environment or general lending, it's almost more important where you get the money from to loan out than the fact that you've got people to loan it to, because the business model requires that you go on feeding the machine. African Bank has been a real leader in recent years in terms of accessing the corporate debt market, not only here in South Africa, but also globally. Their treasurer, Gavin Jones, has been on CNBC Africa often talking about all their new issues. Very important because they've been able to sell the success story of Africa and corporate and consumer lending that way. Capitec has been pretty successful in that space, but has done quite a lot more issuing of new shares. They've done 2 rights issues, which is okay because their return on equity has been excellent.
Well, the funders of African Bank right now are going to be chewing their fingernails to the quick.
A lot of understood those that the funders have been sort of more, they're sanguine really because they know what they're getting out of the deal is, a specific interest rate, and the bonds once issued haven't been actively traded and in recent days don't seem to have gone down much.
Your stance on Capitec, able funding models?
PSG has been the people that have started Capitec, and they've used this model of rights issue quite successfully with the school business, Cura, as well as with Capitec. So they've done rights issues, gone back to existing shareholders and said, put more cash into the business. Able has done a combination of local South African bond issues,
which is what Paul was saying.
Which is what Paul has made. They've also gone with a Swiss bond issue more recently. This has contributed quite nicely to their balance sheet, added on in the order of about 100 billion. If you add all the bits and pieces, 1 billion. My mistake. It's 1.5 billion Swiss francs and a few billion rands. If you add in the bits and pieces, it puts them in a very unique position because they're still able to issue new loans. Also remember, bank licenses allow a multiplier effect in terms of how much of cash you can lend out. So 1 rand in deposits means that you can lend out a multiple, maybe 4 or 5 times in terms of loans.
So the more sturdy model in terms of funding? Sturdy is not the right word.
Look, you get more leverage if you've got a smaller equity base and you're making lots of money. But as I said earlier, Capitec, notwithstanding the dilution of these additional raises,
through the rights
has
issues,
maintained excellent levels of profitability and return on equity. I think there's a timing difference here. I think the unsecured lending market's looking a little bit wobbly at the moment, as we've discussed, as you pointed out many times. African Bank have now put this trading update through where they indicated they're going to add on more provisions. Some say they're being unnecessarily conservative, but I guess they decided, why waste a good crisis? Let's throw the kitchen sink out of the window at the same time. Capitec's last comments were for their December year end, so they still were sounding pretty chipper about everything back then, although they did send out signs that they were getting a little bit more cautious. So now what happens? Well, I don't know. We've got African Bank really hammered down more than 20% plus in recent days. Capitec has come down about 10%. That's the situation we sit with currently.
All right, let me try this again. Funding, who is leading, Capitec or Able, Levant?
There is a big argument between debt and equity finance. Able has taken the route of debt finance, and many can argue in an environment where debt is so cheap, they're able to exact the carry trade between South African interest rates and euro interest rates. They successfully carried that off with their Swiss bond issue. Capitec has taken an equity raising stance, diluting shareholding.
Yes, you've told me all this already.
Right
Which
now,
model do you prefer?
I think Able's done a better.
You prefer Able?
A better route.
Paul?
Yeah, look, although Capitec has the retail depositor base, which is the best kind of money of all, I like Able more in this space. Just trying to make you happy here.